Great morning, fellow traders, and welcome to the new week. This is Austin. It is Monday, August 4th, 7:16 Eastern. I've been at the charts since 5 o'clock today, more or less. Actually, I just happened to get up early, so why not look at the markets? Might be something going on. There has not been. Nothing has happened in crude oil overnight. On my vigil, it's tiny. It's trading in a very tiny range. There is a bullish bias to the filter chart that I use. Alright, so this is the anchor chart, and I'm looking at trigger signals from a different chart that's not visible here. And at this point in time, being that it is in a bullish bias, I'll take a half position to the sell side. Now there are sell signals around the $98 range, okay, around the 9,800 range, and so if that happens, it would be either early in the trend or it would be a fake out, one of the two. If it's early in the trend, then I'll take half a position there and see where it goes. If it's a fake out, I'll get stopped out on half a position. To the long side, which is following the current chart bias, there are buy signals in layers from 98.15 up to 98.20 plus. And so what I've done there is I've just staggered a full order around the trigger zones, and essentially I'd be looking at price sweeping up through, taking these out. I'd put a blended stop in at 98.15 with a blended entry of 98.20, and hopefully if they take out 22, they're going right up the ladder, and that's that. So anyway, that's the game plan for now, subject to change at any time, but a half position sell side, because there are sell signals on the trigger charts, and they may indicate a change of direction here, but the slower filter chart is full bull mode, so we don't want to have full sell side exposure, if any. Your choice could be simpler than that. Your choice could be, I'm only looking for buy signals, nothing else. Your choice could also be, well, I'll take sell signals if they come along, but only in half the exposure of risk. And so that's what we have going on. You've been keeping an eye on the charts for better than 2 hours. Absolutely nothing's happened, but hey, that's trading. Our job is all about babysitting charts for hours and hours in order to take action within mere minutes or even seconds of time. 7:19 Eastern.
Way too many times to believe
Okay.
that. You
First
can
trade
recover,
long,
and you can
stopped out.
actually have a stronger relationship.
I'm sorry, first trade short.
The reason
at,
is because
9800
you've
was triggered to
realized
stop.
that your
Now,
relationship may be
second
have been more vulnerable than you
attempt
believed,
is
and you do
working,
something to fix
and
it.
from there I would expect
That's
price to
how
come
you
down
get
to the
past it and say, wow,
97.60
what
area.
if we
It does
use
that, I'm like,
this
there are several
as a
projections
realization
down to
of
that.
what was wrong in our
So
relationship,
I'm going to look
and we
to
don't let that
defend this
recur?
with a very,
We find a way around
very
this. We
close
work
stop
to
if
get
they trade
beyond it.
down around the
We work
lows,
to make a
97.62
relationship that we
and
can treasure
97.50
forever.
area. And
That's
see what
when
happens from there.
you break
It
that
is
belief that you can't recover.
7:56
So
Eastern.
don't believe that you.
All right, it's 8 o'clock Eastern on the dot, and price is traded in between. It's neither here nor there. It's gone as low as 97.67. So that's not to any target zone, but it's not back up. But I don't want to let it come all the way back up into entry either after having gone nearly 30 cents or thereabouts. So we are trailed at plus 11 ticks. All right, which would be a scratch for the morning. And like I said, if they take them down to 97.60, that's the first area that I want to react to, and then after that would be the 97.40 area if they keep going. But they're sneaking them down there. They get down to 97.60 area, then I'm going to trail this position down to around there for 30 plus ticks, and then see how that goes. And now mind you, trading this size because this is quote counter trend. The market is sideways, has been sideways since Friday, and it still is. It's trading in a range. It's not trending. There may be a pullback and bounce here. We got a number of things going on below 97.60. So for all I know, for all you know or anyone else, 96, 95, 94 is going to be the where the market's at by the end of today. We have no idea. All we can do is react to the waypoints. And so for now, from from where it's been to where it's going, the 9760 area is the next waypoint in sight, and then we'll deal with whatever comes after that when whatever else comes after that. 8:01 Eastern. All right, there they go, as we discussed.
Order pending. Order canceled.
Moving lower, and prices at layered congestion here. The next waypoints are 9740 area, 9720 area, and those may very well happen, but for now they've reached some potential bounce points, so we're positioned accordingly. And I will keep managing this in 10 tick increments. I will manage it down to 97.57, 97.47, given the chance, or it's going to get taken out near where it is now, whichever comes first. So, see what happens next. 8:03. Alrighty then. As expected, there was a congestion and a bounce, a snapback from here, and so the result there is plus 21 ticks or cents, minus 10 ticks on the first short from 98 even, and then plus 31 ticks from the 97.98 is the current box score. And at this point in time, that's it until after the pit session opens. So there, is rather muted overnight session, about 50 cents range, and that's how it is. And price is trading in a place where I have no further interest until pit session opens, and then we'll go from there. But that gives us a little bit of positioning to work with into the real session today when that happens an hour from now. So we'll reconvene after 9 o'clock, and we'll see what's left here ahead of us in the pit session, 8:07 Eastern. Okay, continuing on in the pit session. It is, for the record, 9:06 Eastern. The open range for crude is somewhere between 97.50 area and 97.70 area. I have a buy signal from 97.65 zone, give or take several ticks. In that one now, 5-tick initial stop, and we'll see what happens. Now on the filter chart, the trend has slightly changed from, or there's been a slight break from bullish to bearish overall. So once again, still working with a one contract position instead of two, or we could say a half size position, and that is a trader's choice. A second trader's choice would be a second choice for traders. Let's say that all you work with is one contract and that's it, and you just want to be one in, one out, no further thought than there. You would be looking short only from here. You would ignore any other buy signals that exist, and you would simply be looking to sell all the way. In my case, I have a buy signal on the trigger chart into a bearish to neutral filter chart, and so my choice there on the trade management side is half position, because if this is going to be a sideways day, and or if this is going to be if this is just a fake out and then they're headed higher to parts unknown, I'll participate. But if that's not the case, they're going to come down and stop me out, and that might happen moments from now as I wait for the sell signal, which by the way is going to be down around 97.50 area. So I'm looking to get short somewhere around 97.50. I'm currently holding this position here at 97.60, and we'll see how it plays out. 9:08. Okay, it is update time. I'm purposely trying to keep the information here at or below 15 minutes. I know for a fact that the shorter a video is, the more plays you'll get. I know for a fact that people, whether it's any kind of viral video on YouTube or something, a training video, anything in between, the first thing they do is, now admit it, first thing you do is you look at how long it is, and then you judge whether the potential information is worth sitting there that long or not. Okay, so I'm trying to keep time as brief as possible in these, and it's really difficult to do in trading when you're trying to condense several hours or an entire day into a 10-minute segment. That said, We had a couple of 5 tick stops, the short and long, and then the final long attempt here. The latest long attempt stuck, and price is still trading in a range. Is trading around this congestion here. Some people would look at this as the potential of a bearish head and shoulders, that if it fails here and it rolls over, then it's going lower, da da da. I don't pay a lot of attention to that. I do pay some attention knowing that other people are looking at that, so therefore it's of importance to some traders, therefore everybody. In any event, if they crack above this here, then they're likely to run substantially higher. They are above the open range. They're above the top of the open range, and that would be next objective up is the 98.15 zone. 98.15 is the 233 up, and then the roadmap number 1 is 98.40. So I'm looking to start making management decisions here in the 98.10 to 15 zone, and then definitely aggressive exit decisions if they hit the 98.40 zone. See how that goes. 9:39 Eastern. Okay, update 9:51. Price has moved right up to the first congestion area around 98 where it failed before, and so what I've elected to do is just manage this with a 11 tick adjustment on the stop. Next from here, if they can push through the 98 zone, is going to be 98.10 and then say 98.20 plus to 30. So to keep it simple, they need to make it through 98. If they don't, it's going to stay sideways or possibly come right straight back down, and I would be looking long around 97.75 or thereabouts, in that neighborhood. If they make it up through 98, then 98.10 is the next layered congestion, and then above that it's clear sailing to 98.30-40 zone. Oh, that's how we're managing things. It's always educated guess. 9:52. Okay, here we go. Quick whip spike. Let's do the 5-minute here.
Order
See how it's
filled.
whip spiking. Went to the 98.10 zone that we spoke of, 98.20ish. And I happen to be sitting here like a hawk perched on a tree, and it whipped up, and I just got the trail to 98.10, and I wanted to advance it, but it took that out, and that was that. So that is a 43 tick yield on per contract. I'm going to do the open range here, and then we will call it a day. That's it for me. I'm done with crude for today. And the validity, what we're looking at here. See why I picked 93.10? One of several reasons. It may, and for all we know, they're going to trade back to 100. There could be tons and tons of opportunity today. I simply don't care. I have performed optimally in what I'm looking, what I'm looking for out of today, and that's that. Let me get a wider range so we can see a scope here. And they may run. Here are the 30-minute chart. I'm just trying to broaden the view. We talked about 98, 30, 40 being the zones. That's them. For all we know, they're going to trade right back up here to 99.50 or whatever. There could be all kinds of potential today, and you're welcome to take advantage of it. That's enough for me. Like I said, if I averaged 200 ticks a month, not a day, not a week, but an entire month, 200 ticks per contract, that's $2,000 a contract. Crude oil will let you trade lots. You can trade 5 or 10 or 20 at a clip, and the slippage and fills and all of that would be well within tolerable limits. So that's it for me. Steady she goes. Do it again tomorrow. Have a great one. Time to play.